They told you, go to school, get a good job, save in an RRSP, and retire happy. But what if I told you that this advice is outdated, and maybe even designed to keep you broke? Every year, millions of hardworking Canadians overpay the CRA, not because they have to, but because they don't know what the wealthy do. 73-year-old Ahmed worked 40 years at a factory in Mississauga. He followed all the rules. But today he survives on CPP, OAS, and a tiny RRSP while still paying taxes. Meanwhile, his 32-year-old nephew, who owns no home, drives a leased car, and hasn't worked a job in 5 years, pays almost nothing in tax, and is investing more than Ahmed ever could. This video will change how you look at Canadian taxes forever. Stay with me, because if you're earning money in Canada and not watching this, you're losing thousands each year. 1. The hidden trap. How most Canadians are taxed the hardest. Let's talk about the middle-class tax trap. The CRA doesn't punish the rich. It punishes the unaware. Meet Sarah. She's a 38-year-old nurse in Toronto making $92,000 a year. On paper, she's successful, but her marginal tax rate is over 43% in Ontario. Add payroll deductions, CPP, EI, and inflation, and she's left with barely 50% of her income. She contributes to her RRSP, thinking it saves her money. But when she retires and starts withdrawing, she's taxed again. That's double taxation. Now let's compare that to Jason, a small business owner making $120K. He pays himself just $45K in salary, claims business expenses like phone, car, part of his rent. The rest? Left in his corporation, taxed at a low 12.2%. Same income, different knowledge, radically different results. 2. The wealth formula. What the rich do differently. Here's a secret the wealthy in Canada never say out loud. They don't avoid taxes by cheating. They avoid them by understanding the system. The rich don't earn money through salary. They earn through structure. They use 3 levers. Corporations, so they control how much personal tax they pay. Dividends, taxed at a lower rate than regular income. Capital gains, where only 50% is taxable. Let's say you invest 10K in a stock and it grows to 50K. You sell, and only 20K is taxable. But if you earn that same 40K as salary, you're taxed on every single dollar. This is why high net worth Canadians focus on buying appreciating assets, not earning more T4 income. Here, real Canadian tax hacks. Let's break this down into things you can start doing this year to legally lower your taxes and build wealth faster. 1. Set up a side business, even a small one. Start a consulting gig, sell on Etsy, or invest in rental property. You can write off part of your internet, phone, car, even home office. 2. Use the TFSA like the wealthy. Do most people use TFSAs to save? The rich use it to invest. You can grow 95 CAPAs of contribution room completely tax-free. Buy stocks, ETFs, or REITs, and let it compound untouched. 3. Split income with your spouse or family. Using spousal RRSPs or family trusts can massively reduce your tax bill. You can shift income to someone in a lower tax bracket. 4. Maximize capital gains and dividends. Capital gains are 50% taxable. Eligible dividends from Canadian cores have special credits. 5. Incorporate smartly. If you make over $80K a year from self-employment or side gigs, incorporating can save you 15 to 25% in taxes. Remember, you don't have to be rich to use these strategies. You just have to be informed. 4. A new mindset for wealth in Canada. Imagine this. You earn less, but keep more. You don't retire broke, you retire free. That's the power of tax planning. You're not just saving money, you're taking back control of your financial destiny. The system was never built to reward hard work alone. It rewards smart structure, legal planning, and financial awareness. Nobody taught our parents this. The system trained them to be good employees and obedient taxpayers. But now, you have access to knowledge they never had. Don't be Ahmed, working 40 years only to end up broke. Be like Jason. Structure your income, invest wisely, and legally reduce your taxes. The government won't remind you of this. The CRA won't call and say, hey, you could have paid less. It's on you to learn the rules or be ruled by them. If this video helped you see money differently, smash that like button, subscribe, and share this with someone who's still working too hard for too little. And remember, in Canada, The real wealth isn't how much you make, it's how much you keep.